I spoke to Dr. C Rangarajan, former chairman, Economic Advisory Council to the Prime Minister earlier today after the policy came out, when the governor did leave the key interest rates absolutely unchanged. So the policy pretty much was on the expected lines. And when I asked Dr. C Rangarajan about his first reaction on the policy, then this is what he had to say.
Well, it is along expected lines, both in relation to the decision on the policy rate, as well as an indication as to what we can expect in the course of the next few months. I think there are enough indications in the policy statement that more accommodative policy could be put in place if the present trend in inflation continues. And that could happen in the first quarter of the next calendar year.
So you're actually expecting a rate cut coming in the first quarter. Are you seeing that happening in the month of February or after the budget in the month of April, when we have the next monetary policy review meet, after taking into account what happens, what comes out in the budget? So when exactly are you expecting a rate cut coming through?
Well, it is very difficult to say, but probably it could somewhat coincide with the presentation of the budget. So if the budget is presented towards the end of February, we can expect an announcement from the monetary authorities in early March, taking into account what the budget has said and what the budget numbers are. Therefore, there is a possibility. But I will not also rule out in the early February policy announcement also. It all depends upon what happens to the inflation rate for December and so on, for which data would be available by that time. Therefore, but the indications are quite clear as to where we are headed towards.
But Dr. Rangarajan, looking at the current economic scenario, oil prices have been falling continuously. Inflation is on a downward trend. Do you think that the government had this room to take a chance in this particular monetary policy review and could have actually gone ahead and cut the interest rates, because tomorrow, maybe 6 months from here on, oil prices may start going up again?
Well, that must have been in the back of the mind of the policymakers also. Therefore, if there is a sudden reversal within a short time after a policy change is announced, it may not look nice. Therefore, I personally think that early February could be an appropriate time to make the change. And I also wish to say that once a change is made in one direction, it does not rule out a modification of the policy rate subsequently if circumstances change very substantially. Therefore, monetary policy is a short-term instrument and therefore can be used in either direction. Therefore, one doesn't have to take the view that if a policy rate is reduced, then it must be reduced forever thereafter. I mean, that's not the way to look at it. But certainly, I believe that it's a cautious view, but early February is still not ruled out.
All right, so you're confident about early February. But, at the same time, the RBI did acknowledge a deceleration in inflation that we have seen and has also revised their March 2015 target. What do you have to think about? What do you think about the target that the RBI has set for January 2016 at 6%? That, looking at the trend that we are seeing right now, that looks achievable.
Well, I think the target for January 2016 should be brought down. It should be brought down to 5% because if the new monetary policy framework is to be put in operation next year, then the inflation rate will have to range between 2% and 6% with 4% as the central point. Therefore, in fact, if inflation exceeds beyond 6%, very strong action is required to be taken. Therefore, I would urge that the monetary authorities seek to revise the target of inflation for January 2016 from the 6% to 5%. I think that should be the goal.
And what do you have to say about the statements that the governor made today, creating framework for a sustainable growth, and spoke about the misconception that the corporates and the industry has that RBI is just not concerned about growth, just focusing on inflation and not doing anything to boost demand and eventually growth. What do you have to say about those?
Well, the argument has been that for sustaining a high growth rate, you need an environment of reasonably low inflation. High inflation is not conducive to rapid accumulation of savings or investment. Therefore, monetary policy can play an important role in stimulating and sustaining high economic growth by keeping a low inflation rate. So therefore, that is a medium-term goal. Therefore, in some sense, the policy has been moving in this direction for the last year and a half or so, in trying to get the inflation rate to a level at which it will be most conducive for rapid economic growth. I don't think we should pose the two objectives as being opposed to each other. I think we should work towards a low inflation rate as being comfortable and supportive of high growth.
And what will you say about the forward guidance that the governor has given today?
I think there is a very positive element in the second half of the statement, where it says that if certain trends continue, there is a possibility of a change in the policy in terms of easier accommodation, and also indicating that changes in policy need not wait for the fixed policy announcement dates. Therefore, taking the statement or the paragraph as a whole, I would say that there is clear indication that the easing of monetary policy can happen in the first quarter of the next calendar year.
All right, so there you heard the views of Dr. Rangarajan on the monetary policy review that we had today. So he believes policy is pretty much along the expected lines, but also feels that the CPI target for January 2016 now should be brought down from the 6% target that we have to about 5%.